worldwide economic downturn accelerates. The world economy is deteriorating much more quickly than leading economists have predicted, with Britain becoming the latest nation to surprise economists with the death of its economic pain, and Iceland's coalition government has collapsed because of the economic crisis. Britain posted its worst quarterly contraction since 1980 on the heels of sharper than expected slowdowns reported from Germany to China to South Korea. The grim data, economists say, underscores how the burst of the biggest credit bubble in history is seeping into the real economies all around the world, shutting down construction cranes, bankrupting businesses, and throwing millions and millions of people out of work. In just the past few days, we've had a big downward revision. We're seeing that an even bigger deceleration is on the way, much more than we thought, said a former chief economist at the International Monetary Fund. The depth and breadth of the troubles, economists say, indicates that nations may need to spend even more than the billions and billions of dollars or trillions of dollars already planned on stimulus packages to jumpstart their economies. And there's no way now to tell when the global recovery could be. Economists are particularly concerned about the slowdown in China and the recession in Europe. There is mounting concern about the stability of the euro and the British pound and the American dollar, among others. And the British pound, which dropped to a 24-year low against the dollar. Economists are worried about the possibility of a debt default in a Eurozone country that could send even more fresh shockwaves through global financial markets. And the problems in Europe now appear to be as bad, if not worse, than those in the United States. For now, in the last quarter of 2008, the British economy shrank at an annualized rate of 6%. That is much worse than economists expected, but also showed the British recession may be even harsher than the one in the United States so far, where economists predict data will show the U.S. economy to have contracted between 5 and 5.5% in the last quarter of 2008. And the meltdown is altering high streets in Britain, where retail icon Woolworths shuttered the last of its 807 branches this month after 99 years in business. And that's just one example. The average price of a house has fallen to mid-2004 levels, according to Halifax, Britain's biggest mortgage lender, and car sales are at a 12-year low, just like in the U.S., where it's even worse. The number of people out of work has climbed to nearly 2 million people. In fact, the only sector to show growth in Britain was agriculture, which accounts for about 1% of the overall economy. The question now is not how bad will 2009 be, but will it be even possible to recover in 2010? And if we recover, will it only be anemic? Said a professor of economics at the London Business School, adding that the housing bubble is bigger Consumer debt is higher, and the speed of the slowdown much faster than in any previous recessions. There's never been a worldwide economic crisis or recession like this ever before, and it's getting worse day by day. And it's also connected to something bigger that's going on. There is something bigger going on here. Partial data released in recent days by Germany, Europe's single biggest economy, indicates its economy saw a major contraction in the last months of 2008, posting a 6% annualized drop. And that could get worse as problems mount in the European financial system. In recent days, major banks in Europe, including the Royal Bank of Scotland, reported surprisingly massive losses. Again, surprisingly massive losses. European authorities are seen by some critics as falling behind the Americans in dealing with distress in their financial sectors. How much money can you borrow? Or how much money can you print? And like I say, there's something more going on here. Because everything is connected or interconnected to everything else that's going on around the world. Standard & Poor's has downgraded Greek and Spanish bonds and warned that others, including Ireland's, may be next. The sense that some European countries are now more risky has driven up the borrowing costs for even large nations in the region, including Italy. That has made it harder for those countries to raise the vast sums needed to launch major stimulus packages aimed at economic recoveries. And also troubling are signs that China, once a rare light in the global economy, may not prove to be the pillar of strength in Asia that many people had hoped for. China announced this week that its economy grew by 6.8% in the fourth quarter of 2008. Slower than the 7% many economists had expected, bringing total growth for 2008 to a 7-year low. And growth is still falling. Chinese data, however, are sometimes somewhat opaque, and economists warn the slowdown there may be sharper than China is willing to admit. And that is diminishing hopes for China as Asia's economic white knight, with its growth potentially propping up economies in the region. But that doesn't look like that's going to happen now. And as China grows at a far slower rate, it is importing fewer goods from neighbors, giving export-dependent nations in the region no way to pick up the slack from falling demand in the United States and Europe. Particularly hard hit is South Korea, for example, which saw trade with China soar in recent years, but no more. And as China slows and the United States, Europe, and Japan sink into ever deeper recessions, unsold goods are piling up at South Korea docks. Yes, this is a worldwide economic crisis like never seen before. And once again, there's something more going on here. Something even bigger than all this is happening. And these are all more end times transition days or times signs.